Thank you all for tuning in. Now, I can't promise you the outcome that you're gonna get from watching this, but what I can tell you, if you apply what you're about to learn, this will change your financial future. If you're here, it's probably because you're ready for change. And what you're gonna learn in tonight's training will do just that. So if taking back control of your money isn't enough to keep you glued to this screen for the next 90 minutes, I think it's time to reassess your priorities. You're gonna learn how to take back control of your money. And you're gonna do that by learning how to be the bank. Number two, you're gonna learn how to build wealth through your own debts and expenses. And you can do that without working harder, without working longer, and without taking on any additional risk. And number three, you're gonna learn how to get all the money back for every single car you will ever buy, drive, and own. That's exactly what you're gonna learn in tonight's training, so get ready, get set, let's go.
Take back control.
Tuesday night.
Tuesday?
All right, hey, what's up, everyone? Welcome to the Take Back Control Tuesday 90-minute infinite banking concept training event. So my name's Stephen Nagy. I'll be hosting the show here today. I am basically run our agency partners in Money School and the Money Multiplier, and really help with the overall business that we've created here at BYOB Money Multiplier. And a lot of my team is traveling today. We have a special event going on for a lot of our agents out in Whistler, Canada. So we have people in different places. So I said, you know what? I'm going to jump on the horse and deliver the presentation myself today. So hopefully you guys get some value out of this. Welcome to those of you that are new to becoming your own banker and what we do here at BYOB Money School. This is all about taking back control of your money and solving your money problem. And that's exactly what we're going to do today over the next 90 minutes or so. So with that being said, I do want to make this pretty interactive, and I want to make sure I answer your questions. So as I ask things, put it in the chat box. Any questions you have, put those in the Q&A section, and I'll make sure to answer those questions either as we go, or if I know that I'm getting ready to talk about it, I will maybe just wait a minute, or I'll be sure to definitely answer them at the end if I don't get to it during the presentation. But like I said, make it interactive, have some fun over in the chat box, do some networking. You know, I see a lot of familiar faces on here, people that are around every week that have been doing this now for years, as well as new faces, people that have not even started becoming their own bank yet. So really, I just like to ask a couple questions. You know, what's this all about? And really, you know, we're here to solve your money problem, like I said. And so what does that mean for you? And, you know, this isn't a concept I'm teaching today that can maybe work or generally works or things like that. This is a very specific strategy that's built and used around your situation specifically. Okay, so for a lot of people, they look at becoming their own bank because they would like to maybe pay off some debt while still building wealth and creating a legacy for the future. And that's one thing I'm going to show you today is how to pay off debt quicker while still building wealth. It's mind-blowing stuff. So stay with me till the end, and I promise you, you guys are going to get a lot out of this today. I can also show you how many of you are thinking about buying a car, let's say in the next 6 to 12 months or sooner. Anybody thinking about buying a car? Well, how would you like if I could teach you today how to get back every dollar for every car you'll ever buy, drive, and own in the future? Would anybody like to learn that today? Or those of you, maybe you're building wealth. Are there any real estate investors, any business owners that are in watching right now? Anybody of that nature? Because I'm also going to show you how we can take advantage of this banking concept and grow our money in multiple ways simultaneously. So taking the same dollar that we would typically invest, but making that dollar earn a lot more money for us over time instead of just through that investment. Any of you doing that right now? Maybe private money lending, maybe active real estate investing or rental properties, things of that nature. So these are all different examples I'm going to show you today. Now, what we teach is called the infinite banking concept. And the infinite in there is because we can use this in an infinite amount of ways. I talk to people every single day. I attend events multiple times every single year where all we do is talk about this stuff. And I'm always learning about new ways to use the banking system, new investment opportunities, new ways to grow wealth and control our money. And what we do is we take those conversations, we take those strategies, we apply them in our own lives, and we come out here and we share it with other people. And that's what this is all about here today. So, with that being said, where are you today? So, as we go, I'm going to give you a lot of stuff, okay? So I'm going to give you a lot of things. I want you to take notes. So, if you have a notepad, if you're somebody that likes to take physical notes or, on your phone, open up the notepad app, something like that, but get ready to take some notes. I also want you to start thinking, where am I today and where do I want to be in the future? Very, very important. Because every single one of you that's on here right now is starting in a different financial position with a different amount of knowledge base. And every single one of you, your goals are completely different. I talk to multimillionaires all the time that have very simple lifestyles, but I also talk to multimillionaires all the time that have very extravagant lifestyles. Same with people that are just kind of getting out of the rat race or, maybe just starting to start a family or maybe just getting out of college, right? So everybody's different what life looks like. But the ultimate goal here is to take back more of our time, let our dollars do more work for us to give us our time back so we can go out there and do what's important to us in life. Okay. And every one of you is different. I just got back from a week-long vacation with my family out in the Exumas in the Bahamas, one of the most beautiful places in the world. We went around and swam with the pigs and went to Iguana Island and hung out where the big, 180-foot mega yachts are and the crystal clear waters and scooping up conchs and spearing fish and, the whole thing. And, it's a lot of fun. And so to me, I love doing things like that. I love travel. I love adventure. I love experiences. So a lot of my motivation in life and the reason why I work so hard and do what I do is so that I can go out there and I can spend more time and create more memories with my loved ones, with my friends, with people that are close to me. So what does that look like for you? So start thinking about this stuff because ultimately, and I hope this is okay to share with you all, but I don't have anything to sell you today, just so you know. At the end, there's no, run your credit card here or, hey, buy this package and we're going to coach you, anything like that. We have nothing to sell. Okay. This is completely free. We do 6 live free webinars every single week. And I'll share that link on how to join the rest of those webinars we do every single week as well in just a moment. But we don't have anything to sell you. But what I will invite you to do, if it's okay, is I'll invite you to schedule a call with one of my infinite banking concept, Nelson Nash practitioner, certified expert money mentors. And my money mentors are professionals in the infinite banking concept and investing. And they're going to, when I invite you to schedule a call with them, they're simply going to spend about an hour with you talking about your situation. So where are you today? What debts do you have? What do you want? What are your goals in life? What does investing look like? What does that look like? We're going to talk to you about that. Why? Because we're going to build a strategy and we're going to build a plan for you to apply and reach those goals, whatever that looks like. So very, very important. All right. So make sure you're writing this stuff down and thinking about this. If you get nothing else out of today, I want you to just think. I want you to go to bed tonight, be thinking about what you heard on this webinar today. And I can promise you, if you stick with me till the end, you will 100% go to bed tonight thinking about me. Not thinking about me, but thinking about what we do here at BYOB Money Multiplier. All right. So with that being said, where are we today? Where are we in the world? Okay. Not only you, but where are we out there in the world? Money and opportunity. What are the markets doing right now? Is anybody financially struggling? Inflation has ran crazy over the last 4 or 5 years. And even though it's come down, inflation's come down year over year. What has not come down? Prices. Prices are still up. See, when things go up, they tend to not come down except for the stock market. Where's the stock market today? Stock market's at all-time highs still. Bitcoin, crypto, all these things are at all-time highs. Real estate even has barely started to correct. You're starting to see it in some areas around the country, but at the end of the day, the real estate market is still very, very high, still very in demand. So prices have gone way up, Incomes have typically not kept up with that. So what's gone on over the last 4, 5, 6 years? Well, people's savings accounts have dropped. Credit usage, credit card debts have increased. We're starting to see increase in auto repossessions, in house foreclosures. So we're starting to see a lot of this stuff go on right now. And so we need to understand, where are we in this world? Are we ready if the markets take a dip? Are we ready for a recession? Are you ready for a crash? Where is your money today? So think about where your money is. And there's multiple different types of money. There's your savings, and we're going to talk a lot about savings here today. There is your cash flow. There's your expenses. There is your qualified money, things like retirement dollars, maybe 401ks or IRAs. There's your investment dollars. So there's also equity. There's leverage. How are we leveraging the equity that we have maybe in our homes, things like that. So where is our money? And if we lost our jobs, if something goes drastically wrong, if a disaster happens, again, like COVID, something like that, can we withstand that storm? Can we take advantage of that storm? Okay, so it's very important to understand this stuff. And I'm not going to get into that today because we're going to focus on the infinite banking concept, but I will invite all of you back tomorrow at 1 p.m. Eastern for the Wealth Webinar Series. And the Wealth Webinar Series is where we start getting into all these broader financial topics. We do a show called What the F Happened every single Wednesday morning at 9:30 a.m. Eastern. So join us for that. That's where we talk about the markets, what's going on in the news, what policy is driving what's going on out there. Okay, so join us for these various webinars. And then we have real estate investment webinars that we do each week. So you can join us for each one of those. And I'll put the link over in the chat box. You can see it on the screen. But that link tree address right there has all of our weekly shows. You can register completely free of charge. So please check that out over in the chat box. All right. And I've been doing this now for about 15 years, a little bit longer, the financial education space. And, what I've learned is about 5% of people that we get in contact with and follow what we do actually take action and become successful. About 5% is what I've seen over my years. And, I've talked to a lot of various trainers and financial advisors out there and people like that. And it seems everyone tends to agree with that 5% number. And so I just wanted to congratulate all of you right now for being on here. There's a little over 60 people on here right now, which is excellent. So congratulations. You all are my 5%. You're my ones that are joining us. Some of you each and every single week to pick up one new nugget. Some of you that are on here for the first time, you're going to see this and you might have to stick around for a while before you take action on it. Some of you are going to see this today and you're going to say, this clicks. This makes all the sense in the world. I'm ready to get going right now. Schedule that call. Let's make it happen. But regardless, I look at you all as my 5%. So congratulations for being here. In fact, the Social Security Administration tells us the same thing. 5 out of 100 people at the retirement age will be financially secure, which leaves us with 95% of Americans in the richest, most successful country the world has ever known in history, the United States of America. 95% of people are struggling financially. Why is that? And I was in my past a traditional licensed financial advisor with American Express Financial Advisors, Ameriprise Financial. And I learned that side of the fence, the traditional route. Save what you can, buy term insurance and invest the difference, put your money in a 401k and wait. All the things, climb the corporate ladder, all of that stuff. And what I found is it just didn't work because I would meet with clients as an advisor and I would tell them, I would say, listen, here's where you are today. Here's where you want to go. But the only way that's going to happen is if you drastically change your plans. You either need to drastically change your lifestyle today. You need to drastically push back when you're able to retire or what retirement looks like, or take on a lot more risk. See, what I love about what we teach today is you can do this stuff. You don't have to work any longer. You don't have to work any harder. You don't have to take on any more risk. You have to change one thing, and that's where your money goes first. And that's what I'm going to show you today. How many of you are able, how many of you, if I could show you that, let me just ask, how many of you right now think that if I could show you that one thing, how to change one thing, and it changes everything else for you? How many of you think you'd be willing to make that change? I'm just curious. All right, quite a few of you. All right, well, we'll see. We're going to get into it right now. All right, so why is it Why is it that more people are not successful? Like I said, I've been doing this for a while, and this is my list I put together. So this is what I call my wealth killers. And we're not going to go deep on this. Again, this is for other webinars at another date. This is just what I found over the years. So the wealth killers, taxes. People bleed so much money out in taxes. There's a reason the tax code book is this thick, because if there's laws on the books of the United States of America that all of us can take advantage of, we just need to know how, what to do, where to put our money in a safe place where we still can access it, but we still get tax advantages, how we can pay less to the government through taxes, keep more of that money, put it to work, earn more money, create charities, foundations, trust. Anybody ever wanted to create a foundation, a charitable foundation? It's a beautiful thing. Highly recommend it. These are all different things we can do. Have a company, have an LLC. This is all stuff every one of you can do right now to start saving on that wealth killer. Inflation. How do we eliminate inflation? We keep our money moving. See, money in motion, money moving is always making more money. Money sitting still is what? Money sitting still is losing. It's losing to inflation. If you gave me a dollar 5 years ago, will that same dollar buy the same thing today? No, it buys significantly less. Inflation erodes the dollar, erodes our spending power, and it kills people's wealth when they don't understand the idea of keeping money in motion. And that's exactly one of the major ways that this strategy is so powerful with the infinite banking concept, becoming your own banker, is by keeping your money in motion so we can start eliminating inflation from our lives. Volatility. What I mentioned before about the stock market. Did anybody have money in the stock market or real estate back in 2008? Did you lose money then? Right? Maybe if you didn't sell. Well, in the stock market, you only lose money if you sell. Well, guess what? There's also things like actual versus average returns. There's also things like the drawdown effect, where if I lose 10% today, guess what? I got to earn back 12% tomorrow just to get back to even. Okay, so volatility, especially when you don't have the timing right, which you can't time markets. Would you agree with that? So volatility can destroy people's financial lives. And when a financial life gets ruined, what else happens? Your whole family gets ruined. Do you guys know the number one cause of divorce in this country is money? It's wild, and there's no reason for it. So we got to start eliminating these things, eliminate them from our lives. That's exactly what we're starting to work on here today. And then interest. When I started to learn and really dig into what becoming your own banker is all about, it's all about the flow of money and interest in your life. And when you realize over time, and I'll show you an example in a minute, but when it comes to vehicles and everyday purchases and homes, mortgages, 30-year mortgages, how much interest gets paid out and leaves your financial life forever, it's mind blowing. And that's something I've only started to learn about in the last 5 or 6 years. The interest part of this, which is so, so important. And then it just boils down to you. What's your mindset? Are you able to break away from the rat race, what you've always done, the status quo? Are you able to say, listen, just because 10 other people in my life are doing the same thing, can I do something differently? Do you have the mental strength to be able to break away and do that? Can you get out of your own head and eliminate fear? Fear is only the fear of the unknown. When I was out in the Bahamas last week, the Exumas, the first day we rented we rented a little Boston whaler, 17-foot Boston whaler, and I had never been on the waters in the Exumas before, and it's very shallow water, a lot of rocks everywhere, things like that. I jumped on the boat. I had my wife and my son with me, and we're riding around. I was lost. I didn't know what to do. Luckily, we had a good friend of ours with us. He was on another boat, and he had been there before, so we followed him the first day. So I got comfortable driving the boat, got comfortable with the waters and how to navigate them. My fear started to dissipate by the end of the day. You know what happened the second day? My son said, I want to drive the boat. He's 9 years old. I said, all right, let's give him a shot. I sat right next to him. I was scared. I had fear. I don't, he's 9 years old driving a boat through these open waters in the Bahamas. So he's driving, he's doing an incredible job. Guess what happened by the end of the day and going into day 3 and day 4? I was on the front of the boat. At one point, I wasn't even on the boat. I let him take it. Why? Because I had confidence, I had trust, and I eliminated the fear that he would be able to operate and do the right thing with that boat, that we would be able to go out there in those waters and go all over the place. The last day we were there, my friend had to go home. So we were out there, my wife and son, just the 3 of us, all over the place by ourselves out there. Why? Because the fear was gone. I would have been scared to do that on day 1 without somebody showing me the way. And so that's what we do is we not only provide education, why we do all of these weekly webinars, why we give you a money mentor to hold your hand, support you, lead you along the way, because I know from experience, from working with thousands of clients over 15 years, that if I can teach somebody something, hold their hand to get them started with it, guess what? They're going to have the confidence to go out there and do it on themselves. And that's exactly what we're doing here right now today. So, and then of course, life happens, guys. You just got to get over it sometimes, right? As things go wrong, how do we get over that? But more importantly, how do we plan for when things go wrong? Okay? Again, you can't time the markets, but we can study history. We know that something's going to happen in the next year, 2, 3, 4, 5 years. Markets don't stay up forever. It's just look at history forever and ever and ever. So we're going to have corrections. We're going to have something that happens. Something's going to go on. How do we plan for that? How do we prepare for that? How do we say, listen, if the worst happens, am I still okay? Can I weather the storm? Can I take advantage of that storm? Can we set ourselves up? And we'll start to teach you that as well. But that fear one, guys, is so very important. Here's one of my favorite quotes of what we do. This was from Will Rogers. He said, "The problem in America isn't so much what people don't know, it's what people think they know that just ain't so." Think about that for just a minute. And as we go here, it's what people think they know that just ain't so. And you're going to see that over and over and over again. In fact, a lot of it is just a shift in mindset. And I'll give you an example. When you get off this webinar today, maybe later today, tonight, something like that, go onto your phone on YouTube and go on YouTube and type in backwards bicycle, the backwards bicycle. And it's going to pop up a video. And this young guy, what he did is he took a bicycle that every one of us knows how to ride. You hop on a bike. I don't care if you didn't ride a bike for 20 years. You hop back on that thing, you know exactly how to drive that thing, right? Well, guess what he did is he took a bicycle and he reversed the way that the handlebars operate. So typically when you turn a handlebars one way, the bike goes one way and another, and we learn how to do that. It gets engraved in our minds forever and ever and ever. Well, what he did is he took this bicycle and he reversed the way that that works. And guess what happens when you make that one little change? Nobody can ride that bicycle. And in this video, they show examples of people trying, and he goes out there and he goes on stage and he does all this stuff. And guess what? Nobody can ride the bicycle, the backwards bicycle. Now, when you get on that backwards bicycle and you start practicing and you fall a few times and you get back up and you go and go again, what starts to happen? Well, you start to reprogram your mind. Your mind starts to forget about the old way of doing things and it starts to learn the new way of doing things. Okay. And that's exactly what everyone on here needs to start doing. And those of you that are on here every single week, bravo to you, because that's what you're doing. You're saying, I'm not going to allow my brain to go back to the old way of doing things. I'm focusing 100% on my goals, on what I want to accomplish, and doing it the right way. And I'm not going to let the noise, I'm not going to let the past, I'm not going to let any of this stuff ever affect me. All right. And so watch that video because it's really interesting. And they talk about brain chemistry and why it happens and things like that. It's very fascinating. And the other thing I'll recommend, and again, this is very, very important, surround yourself with the right people. And if you don't have those right people in your life, allow us to become those people. And again, those that are on here every week on the webinars, come to the live events, hang out with us in person. You know why? Because a lot of us, and guys, I'm the same way. A lot of my friends and family don't do this stuff. I rely on you all just as much as you rely on me because we create atmosphere around each other. So people like Brent Kessler, who's the founder of the Money Multiplier, one of my good friends and business partners. Those of you that know Brent, just an amazing guy, incredible guy. He's just something about him. Those of you that have met him, right? So surround yourself with the right people. Chris Naugle, my business partner. When I first met Chris, he had this quote up on the screen. It's never about your actual resources. It's about how resourceful you can be. And I've always kept that up there because I love it, because it really encapsulates what we do. It doesn't matter if you're starting in massive debt right now. It doesn't matter if you're already ahead and making great money, saving big investments, your net worth, you're a high net worth investor. You can be on either sides of those spectrums. It doesn't matter what your actual resources are. It's about how resourceful you can be. Those of you that are starting fresh in debt, whatever the case might be, There's strategies you can use to get you out of that, to move you to the next level. For those of you that have the money already or are building the wealth right now, how do you keep it? How do you be safe with it? How do you put it to more work? How do you make it more efficient? So there's different strategies, but so it doesn't matter where you are. This can work for anybody and everybody. And then keep your mind right, like I mentioned, not only webinars, but books. How many of you listen to books and audio books? Here's a few I would recommend to get you started with. Anything by Robert Kiyosaki, Rich Dad, Poor Dad. He was one of my mentors when I first got started investing in real estate. Robert Kiyosaki. I actually had the opportunity to go travel and work with him for a while. Incredible guy. So anything by Kiyosaki. And in fact, this book right here, Second Chance, is where he talks all about the infinite banking concept in this book right here. How about Tony Robbins? Any Tony Robbins followers out there? Well, he talks all about IBC in this book, Money Master the Game. R. Nelson Nash, the late Nelson Nash, the godfather of the modern day infinite banking concept, becoming your own banker. This is the book you need to start with. If you're new on here right now, go order this book. It's on Amazon. You can download the audio version, whatever. But Becoming Your Own Banker by Nelson Nash, get it today. Mapping Out the Millionaire Mystery by Brent and Chris. This book was written a few years back as almost like a revised version of Nelson Nash's Becoming Your Own Banker. And then, of course, the Private Money Guide, a real estate edition for those of you getting into real estate, a book that Chris wrote several years back. Very, very powerful. And one of the gifts I wanted to give everybody for being on here today were those books right there. Excuse me. Not all of these, but I want to give you guys a few of these books, okay? So I'm going to give you digital copies. Mapping Out the Millionaire Mystery, the Private Money Guide Real Estate Edition, and another book we wrote called How to Get Driving in the Fast Lane, How to Get Back All the Money for Every Car You'll Ever Buy, Drive, and Own. So if you guys want those free digital books, I'll put a link up. Actually, let me have you, I want to make sure you get the right link. So I'm going to have you guys email me, okay? So send me an email if you want digital copies of those books. It's snagy @privatemoneyclub.com or snagy @themoneymultiplier.com, snagy @chrisnaugle.com. Any of the emails you have for me, you can just use the one I put in the chat if you want, though, and I'll make sure you guys get digital copies of those books. Ignore this link on here. Actually, sorry about that. That link is not good. I'll give you guys a better link to use to get this stuff here in just a moment. But here's my contact information if you need anything. Again, snagy @themoneymultiplier.com. This is my cell phone number. It's always out there. So if anybody ever needs to text me, I'm always available typically. All right, cool. So let's start getting into what the infinite banking concept is. And yeah, you can see my family. I live down here in Jupiter, right outside of Jupiter, Florida, over on the East Coast by the Atlantic. Like I've been doing this for over 15 years now, spoken on, I don't know, thousands of stages, thousands of clients I've helped. It's been a heck of a journey. This picture is a little bit older. My son is, like I mentioned, 9 years old now, but I leave this picture up here because this is when I started teaching this concept, the infinite banking concept, is when I took this picture. And so I actually leave this picture up there for a reason, because it makes me remember, one, why I do what I do, but two, how quickly time passes. It feels like, and I don't know if any of you agree with me on this, but it feels like the older I get, the faster time goes. Like the quicker days go by, the quicker months go by, years go by. And so I always leave this picture up here. So anytime I do this presentation, it brings me back for a second and say, you know what, I need to push harder, because that kid turned from what he is in that picture to what he is today real quickly. And it's a beautiful thing, but it's also a scary thing. And so, the other thing, and I'm going to talk about this in just a minute when we get to the machine here, but what we do is not only about helping our financial situations today and improving our financial lives for the future, for retirement, but it's also about legacy. What does that next generation look like? What do you want to accomplish with them? And that's another thing. The older I get, it seems to be that becomes so much more important in my life as well. And so everything we teach and everything I'm showing you here right now today is so very important. And those of you that have children or have nieces and nephews and experience this, it really is a beautiful thing. All right. So let's keep this thing rolling. All right. So what is this money multiplier method? What is the infinite banking concept? So I'm going to break this into 3 different pieces for you today to keep it simple. So first off, we have the machine. What do we build this entire thing on? Number 2, we have what's called the marathon. So this is not get rich quick. This isn't you're going to go out there, you're going to solve all your problems today. This is a concept. This is a strategy. This is something you're going to implement today and you're going to work on for years and years and years to come. It's a marathon, okay? And then we're going to talk about what is typically everyone's favorite topic, which is how do I become that millionaire? How do I stay that millionaire? And how do I make sure this all passes down properly to the next generation? What does that look like? So we're going to talk about growing wealth today as well. Does that sound good to everybody? So I'm going to give you a few different examples, something for everybody on here. Sounds good? You guys ready to get into this? All right, so what is this machine? So first off, this machine that we build this entire strategy and concept on is a dividend paying whole life insurance policy from a mutually owned life insurance company. All right, so I want to make this very, very clear right now. Myself, our entire team, we are licensed life insurance agents to be able to do what we do. Now, there's good news and there's bad news involved with that, I guess. Okay. The good news is because of the way that this is structured, because of us having to be agents, and really there's no bad news for you. There's just bad news for us. We are very regulated in what we say. We're very regulated in how we can create these systems for you. We're very regulated in what all that looks like because we work within the law, obviously, and the rules that are out there. The good news for you, though, is that if you do this right and we set you up properly, which we always do, every person we set up is a little bit different. When we set this up probably for you, you never have to pay us a dime. So just like any other insurance agent out there in the world, we get paid directly from the insurance carriers, the insurance companies, the big, huge insurance companies. We only work with the best of the best insurance companies in the United States of America. We work with about 5 or 6 different companies. We can choose which company is right for your situation. So we can tailor it specifically for what you're trying to accomplish, but they're all great, incredible companies, the best of the best in the country. And I mentioned before, that's where a lot of our agents and team are right now. Chris and Brent and Hannah and everybody's out in Whistler, Canada right now. They're at one of our insurance company's big events that they put on each year, learning about what the company's up to. So Chris was actually just texting me pictures from the screen, showing me some of the different fundamentals and investment strategies that the companies have. It's really interesting stuff. But again, this is what we do all day, every day, is study this stuff, find out what works best for you as our clients. Okay, so good news for you. You never have to pay anything to us out of your pocket because the insurance companies pay us just like any other insurance agent out there in the world. And that's for lifetime service and support from us. You never pay us a dime for any of that. Number two, again, like I mentioned, we work with multiple companies so we can truly find the best plan and strategy for you. Now, a couple things important here. When you start a banking system, you only want to use what's called a whole life insurance policy. See, there's a lot of different types of insurance policies. There's things like IULs and VULs and term policies, okay? We can show you mathematically why buy term and invest the difference does not make sense, why this is better. We can show you through tons and tons of examples why IULs and VULs should never, ever be used specifically for this strategy. My opinion, probably never as a financial strategy, although maybe for higher net worth individuals doing some premium finance with an IUL for a very, very long-term legacy planning. An IUL might make sense, but even in the market we're in today, I don't buy it still. I haven't seen any good ones. So just understand, we do whole life insurance policies only. Why? Because it's the only thing we would ever buy and own ourselves in our lives. So it's the only thing we would ever sell and teach or use for our clients, I should say. Okay. All right. So very simple. Happy to answer any questions on that too, if anybody does have any. All right, so we also wanted to use, why do we use whole life insurance as the machine? It's because we want to do what the banks do. And if we look at what banks do, banks keep over 90% of their M1 money supply in 2 different assets. Do you guys know what those asset classes are? Number one is called bank-owned life insurance. So banks are the #1 purchasers of whole life insurance in the country. Okay. That's why when you go to a bank, everybody's a vice president or some kind of director or executive because the bank then has an insurable interest on that person and they can buy a life insurance policy on that person. That's the only reason they do that. So bank-owned life insurance, you guys can look all this stuff up if you want to online. So bank-owned life insurance called BOLI, very, very important right there. And the second place that banks keep all of their money, their M1 money supply, is in real estate. They buy real estate, they do mortgage notes, but it's in real estate. And so we are going to start mimicking what banks do. It's why this is the two things that I primarily do: whole life insurance policies and real estate. And it's why it makes sense. And I'll show you some examples of this today. So if the banks are doing it and we want to become our own bank, does it make sense that we start doing this as well, right? All right, so that's exactly what's going on here. Yeah, Anthony said, like that real estate company that sells burgers. Absolutely, McDonald's. Go back and research McDonald's and the history of McDonald's. See, they were very, very smart when they first started, because they would go out there and they would actually buy all of the real estate that their franchises were on. And not only would they do that, but McDonald's would actually buy all the real estate on different corners of an intersection. So if they're like, hey, we're going to put a McDonald's here on this busy intersection, they would buy that land. They would also buy the land on the other corners. And guess what they did over time? They started leasing that land to their competitors, Burger Kings, Wendy's, places like that. Why? Because they knew the money was in real estate. So the old joke that Anthony's referring to is, people, or McDonald's is a company, is a real estate company that just happens to flip burgers, which is a great lesson to learn right there as well. And in fact, Ray Kroc, who started McDonald's, actually, when he was almost going bankrupt, he used one of his whole life insurance policies to keep McDonald's going. I think I have the example here in just a minute. But who else uses whole life insurance this way throughout history? Well, we're starting to see it more and more popular in sports. Jim Harbaugh made news. This was from the USA Today in 2016. So this was about 9, 10 years ago. And Jim Harbaugh at the time became one of the highest paid college football coaches, and a large portion of his salary, this type of, you can read it right here, this type of deferred compensation alternative appeals to talented leaders and executives. Cash value life insurance makes Harbaugh the college football's top paid coach. And we're starting to see this more and more and more with high level coaches and executives out there. Joe Biden, love him or hate him, or whatever the case might be, owned lots and lots of policies. Right here, talked about he had 6 life insurance policies with Mass Mutual. And why do all these politicians, why do all these people own whole life insurance policies and store wealth within them? Because they're private, because they're protected, because they don't have to disclose anything within them. They're one of the safest vehicles to store wealth in history. I mentioned Ray Kroc. How about Walt Disney? Walt Disney wanted to start Disneyland, but after failing in the pursuit of traditional means of financing to build what he would become later Disneyland, Walt decided to provide his own financing. A large part of this came to be by collaterally borrowing money from his cash value life insurance. Very cool stuff. So we're just mimicking what people over history have already done. And you'll see it. Some of the wealthiest families, the JPs, the Morgans, the Chases, the Rockefellers. I mean, it's just incredible, how long this strategy's been used. Over 200 years, this strategy's been out there. All we do are bringing you modern day strategies on how to use this same exact concept. Really cool stuff. All right, so that's the machine. Who's used the machine? So how does the machine operate? And this is where we need to start understanding some basic principles, some banking principles. So what are some principles of how banking works, and how do we start mimicking that? Well, I think we understand how banks operate, but just to be clear here, when you take $100,000, for example, and you go deposit it at the bank, you guys realize the bank doesn't just put that in a little safe deposit box and wait for you to come back and get the 100,000, right? What do? They take that money and they immediately start moving that money. Now they'll pay you some interest in a savings account or something to sit that money there. But then what do? They start moving that money. And why do they do that? Because they want to start making what's called a spread. So how do they do that? Well, you put your money in, the bank immediately takes that money, and they might lend it out to somebody on a home note, on a mortgage. Well, that home buyer buys that a house, gives the money to the sellers. What do the sellers do? They go right to the bank and deposit it back in the bank. Then the bank takes it and says, okay, well, now that you got a house, you need a new car. Let's put a BMW in the driveway. So they give you a car note. Give it to the car dealer. Car dealer puts it right back in the bank. Now you got to fix up the house. Home remodel loan goes to the contractor. Maybe you got some debt over the years. Debt consolidation loan goes to the credit card companies, right back into the bank. So what is the bank doing here? If they're paying you 4% on your money in a savings account, just as an example, and they're charging a homeowner 7% on a mortgage, what do? They created a 3% spread. They're making 3% on your money. Well, let's say if they do it with a car, yep, they're making a 4% spread on your money. Let's say they do it on a home remodel loan, 5% spread, debt consolidation loan, an 8% spread. So if we take that and we add it all up, at the end of the day, the bank is making a 20% spread on your money. But think about that for just a second. If you're making 4% and they're making 20%, what are they really doing right there? They're making over 500% off of money that you're leaving sitting there in the bank. Remember I mentioned before, bleeding interest. This is how we stop bleeding interest. We start creating spreads in our own banking system. So instead of me depositing money to somebody else's bank and they do the lending, what if I deposit it to my bank and I do the lending? Then I'm earning the interest, plus I'm earning the spread on all of this. So instead of the bank making 500% on my money, now I am making it. It's going to stay in my financial life and my family's for the rest of my life. All right, and I'll show you specifics on how this works in just a moment. I just want to understand that how these banks operate and why we want to start mimicking these banks. And like I said, you can research this stuff. Here's a website to kind of do some research on how banks operate, BauerFinancial.com. So banks make between 400 and 1,300% on money that you leave there.
You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you've felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up.
So here's another example of how these banks operate. So question, can you make money earning 4% while paying 6%? Yes or no? What do you guys think? Anthony. All right, let's show you. All right, so let's say you want to buy a car and concurrently. Okay, so I'll give you an example. Let's say you want to buy a car and you've been saving money in your bank savings account for the last couple of years. Let's say you have $25,000 now saved up at the bank. So you walk into the bank and you go up to the teller and you say, hi, I'd like to withdraw $25,000 cash. The teller is going to look at you and say, one moment. You're going to walk away. You're going to have a manager come over to you, some kind of vice president at the bank. And they're going to say, hi, I heard you wanted to withdraw $25,000 from your account. Well, first off, does anybody see a problem here already? When's the last time you tried to withdraw a large sum of actual cash from the bank? Because the last time I tried, I think it was $7,000, and I had to go to like 2 or 3 different banks. And one eventually told me I had to come back another day, which isn't even a lot of money. So it's like problem number one. But let me just back to my story. So we're going to borrow $25,000. That vice president of the bank, they're going to say, listen, I understand you want to take $25,000 out. Why? Okay, so you tell them, hey, I want to go buy a car. I don't know why it's your business, but nonetheless, I'm going to use it to go buy a car. And the guy looks at you and he goes, okay, well, how about I offer an alternative? And you're like, okay. And he says, instead of me just giving you $25,000 to go buy that car, then the $25,000 is gone. He goes, what if I let you keep the $25,000 here at the bank earning 4%? And what I'll do is I'll use that as collateral for a loan. And I'll give you a loan so you can go out there and you can buy the car for $25,000. And that way your money can stay in the bank earning 4% and you can still go buy the car. And you go, okay, well, that sounds pretty good. And you look at the banker and say, okay, well, what's the catch? You give me a loan. I know I got to pay interest on a loan. So how much interest are you going to charge me on that loan? And the banker looks at you and says, we're going to charge you a 6% interest rate on that loan. And you look at that banker and you say, listen, banker, I know you have a bowl full of lollipops sitting there. And, those lollipops are called dum-dums. So I already think I'm a dum-dum coming in here. But even I know I'm not going to pay you 6% while you're paying me 4%. Just give me my money. He says, whoa, wait a minute. Let me show you the math. So check this out. Watch how this works. So we take that $25,000. Let's say we decide to take that $25,000 car note at 6%. Is it safe to say a typical car note is about 60 months, 5 years, right? So over those next 5 years, what are you going to do on that car note? You're going to make a monthly payment. I did the math for you. It's $483.32 a month. So we start paying $483 a month to the bank. Well, over those next 5 years, that $25,000 is going to incur about $4,000 in interest. Okay, so the total future value of that $25,000 is right at $29,000. Okay, but what goes on over here in the account? $25,000 at 4% over the same 60 months. Well, check this out. That same $25,000 actually grows to just over $30,500. So if we would have listened to the banker, paid 6% while earning 4%, we would have actually made over $1,500 over that 5-year period of time. Why is that? Well, it's because on the car note over here, this is what's called simple interest. This is the difference in simple and compounding interest. So this is where we start making mindset shifts and start understanding how money flows and how money works. So simple interest loan, like a car note, starts with a $25,000 balance. As we make monthly payments on that, what happens with that balance? It gets lower. So each month, each year, when you're making that 6% interest payment along with the monthly payments, it's on a lower and lower balance over time. So you're not paying as much. Where over here on the right side, what is going on with that money? Well, that money is what's called compounding in that account. So $25,000 at 4% the first year might grow to 26,000. But then what are we doing in the second year? Well, the 26,000 is now growing at 4%, not the initial 25. The second year, maybe it grows to 27.5. Well, now in the third year, our 4% is growing off of 27,500, not 25,000. So each year we're compounding at a higher balance, a higher rate, or a higher principal. And so just because the rate is lower, you actually end up making more money because of the way that money works. Does that make sense to everybody? So very important concept right there. Simple versus compounding interest. We'll come back to that as we talk about how these policies, what they can do for you, okay? Anonymous said, what does the taxpayer have to bail out the banks when they fail? Why does the taxpayer have to? Yeah, you should ask the government that one. That's a great question. But that's another reason. How many of you would like to just get rid of the banks from your lives just out of pure principle? I know that's one of the reasons that led me to this. I said, these banks are robbing people. These banks, when they fail, they rob people. These banks are too big to fail. That's bullshit, right? So forget these banks to create my own banking system for our family. And that's what we use now to finance things. Let's say, yeah, so it's time to take back control. It's just changing one thing, where your money goes first. And I mentioned this earlier, monthly personal savings as a share of disposable income. I mean, look at this over time. This started in 2015. Savings went way up during COVID because nobody was spending money, and it's just dwindled way back down ever since. We're back down below where we were at COVID. It's just getting worse and worse and worse. So I know all of you on here need to make a change. I'm just showing you how to do that. And one thing I wanted to mention real fast also, guys, schedule a call with my team on that link right there. So before you log off, or right now, just click it, click that link so it pops up in a browser window. But what you'll want to do is schedule a call with one of our expert money mentors. And again, when you get on that call, bring with you what your financial situation looks like today, your debts, things like that. So we can start already formulating a plan on how to create this for you. Because again, every one of these policies we design is different and custom specifically for your situation. No policy is the same ever. It's impossible for it to be actually because everybody's different. All right, cool. So I just wanted to throw that out there in case anybody has to hop off early. But hopefully you guys can stick with me because we're going to get into some fun stuff here. All right. So before I move on to the marathon, let me add one more kind of example on how money flows and how to start changing where our money goes first. All right. So this is where that interest gets bled out of our lives. So let's just say this is an average for people over a long period of time, but it's a great example of what this looks like. So let's say every dollar you earn, on average, every dollar you earn, 20% or 20 cents of that dollar goes towards an automobile. So either a payment, upkeep, maintenance, insurance, whatever the case is. 30 cents of every dollar that you earn goes towards housing, rent, mortgages, again, upkeep, principal, interest, tax, whatever the case might be. 40% of every dollar you earn goes towards everything else. Travel, entertainment, kids, food. 10 cents of every dollar that people earn on average goes to savings. And again, is that savings rate dropping today? Like a rock. Why? Because the cost of all that other stuff has done what? It's gone up. And what do most people do? They get their money, they pay everybody else first, and then what's left over, they save for themselves. Is that you? When you get money in, do you pay everybody else first? And if there's anything left over, that's what goes to you for your savings, right? That's how most 95% of people live. 98% of people probably. All right. So we want to change that. We want to change one thing, where our money goes first. So let me show you how we do this and why we do this. All right. So what if we did it backwards? What if every dollar we earn, we first take savings? We keep that for ourselves. But here's the kicker. And you'll see this as I teach this right now. When you save that first, you also then have access to it. Okay. So, but the important part is getting it in there so it starts compounding. Like the example I just showed you. We want to get that in there so it starts compounding uninterrupted for the rest of our lives. And then we can start using it to pay everything off. So here's what we do differently. When we get money in, it goes into our banking system, so it starts compounding forever. And then we start paying everybody else. But if I want to finance something, what am I going to do with that interest? Who am I going to pay it to? Well, instead of the banks anymore, I'm paying it to my bank. So watch how this works. What if I was to do that? So 20 cents of every automobile, 20 cents of every dollar that goes towards that automobile, 5 cents of that 20 cents goes to interest. Okay. So if I made one change, put the money in my own banking system first, finance that car with my banking system, that 5 cents that was going to somebody else's bank, what if it now goes to my bank? What would that do? Well, that goes right back into my savings, essentially, because it's my banking system. So by making that one change right there, by buying a car with my own bank instead of somebody else's, I just increased my annual savings by 50%. Think about it. If I was saving 10 cents a year before, and now by recapturing that lost interest back into my banking system, I'm able to recapture that back in 5 cents of that dollar, that's an extra 50%, right? If I was saving 10 before, another 5, yeah, 50% increase. So just by starting to finance vehicles with my own banking system, I just increased my annual savings by 50%. That one change. What if we did it with housing? What would that look like? On average, 25 cents of every 30 cents spent on housing goes to interest in one way or another. If you ever look at an amortization schedule on a 30-year note, it's crazy how much interest gets paid in the first 7 to 10 years. Something like 80, 90% of it, depending on the interest rate. It's wild. How often do people refinance their homes or move and get a new mortgage note? On average, every 7 years. Banks know what they're doing. Banks know how to run this system for their advantage instead of ours. All we're doing is taking back control to give us the advantage instead of them. So let's take that 25 cents we were bleeding away before, put that back into our lives. How about everything else? Well, on average, about 5 cents. And it's higher right now because credit card usage is going up and credit card rates are higher right now. But about 5 cents, let's just say 5 cents of that gets added as well. Look at that. We just increased our annual savings by something like 500% by making that one change. Where our money goes first. All right. So let's talk about some examples of using this machine, this marathon, as we like to say. And we'll use a car as an example. We all have bought cars before. We all know how this works. So here we go. Let's take a look at what buying cars looks like. All right. So a couple things I'll point out on these policies as we go. Number one, when you start one of these banking policies, there's going to be what's called the premium. Okay. I want you to start thinking, and that premium, just so you know, we don't tell you how much you're going to put into this thing. Okay. On that strategy call with one of our money mentors, they're going to talk to you about this. What works for your situation? But just know that you're going to decide how much you put into this thing. Now, as a guideline minimum, I would recommend at least 10 times your age on a monthly basis. So I'm 42 years old. So if I was starting a policy, I wanted to do a bare minimum for some reason, I would put in 420 bucks a month. About, what is that? About 5 grand a year. Okay. As a minimum. Now, if I wanted to put in as much as I could, that's a whole different situation or somewhere in between. And that's what we'll talk to you about is what that looks like. And those premiums can be paid monthly, quarterly, annually, change over time. It's completely up to you. We can also put in a larger amount up front. And it's called a dump in, a one-time dump in. And I'll show you what that looks like in just a minute and why we might want to do that. But more importantly, those premiums, instead of thinking those as premiums, because when you think of a premium, what do you think of? It's kind of like a negative. It's like a bill. You know, oh, I got to pay my health insurance premium or my car insurance premium or my homeowner's premiums or whatever the case is, right? So this is, again, not a typical whole life insurance policy you're paying premiums on. This is a specially designed and engineered whole life policy built for becoming your own banker and using it with the infinite banking concept. So when we put money into this whole life policy, I look at it as deposits into my own banking system. So these aren't premiums anymore for me. These are deposits into my own banking system. So maybe you want to think about it that way yourselves as well. Age doesn't matter. We start policies for kids that are 6 weeks old, for minors, for 20-year-olds, 30-year-olds, 50-year-olds, 60-year-olds, even people up into their 70s. If you're in your 80s, we might want to start looking at using a different life, but you can still own one of these policies. We just might have to put it on somebody else. Same with health. And then the death benefit. You know, that's another piece of this pie. We have the premiums that go in. We have what's called the cash value. That's what we take loans from. And then we have the death benefit. And that's what goes to our loved ones when we pass away. And we don't talk enough about that death benefit, in my opinion, because it is so very important on all of this stuff that we do. All right, so let's take a look at what this looks like buying a car using this system. So this example right here, they decided to put $10,000 a year into a policy. So you can see over on the right-hand side, the cash value in the money multiplier account. So as money goes into this policy, you'll see the cash value start to grow. All right. And you'll also notice in year one, when you put 10,000 in, you don't have access to the whole $10,000. In this case, you have access to 5,873. Now we can build these policies differently. If you're somebody that's like, hey, I want to get as much money available to me as quickly as possible when I put money into that thing, great. Let us know that. We'll build it for you. In most cases, we can get up over 90% of what you put into it in year one available within 30 days to borrow right back out to use. All right. But let me just show you this example for buying cars. We'll get more into the investing side and those more investor policies in just a minute. All right, so in the third year of this policy, this person decided they wanted to buy a $25,000 car. So they go out, they buy the car, money gets deducted from their cash values. Now they have $4,200 available because they borrowed some money out of it. And then when you buy a car from a regular bank, what do you start to do? Well, we talked about it a minute ago. You start to make monthly payments back to the bank. So if I borrow money from my bank, you borrow money from your bank, what are we going to recommend you do? We're going to recommend you start paying yourself back just like you would pay back somebody else's bank. And again, we'll help you with all this stuff. We'll show you exactly how to do it. We'll create the plan for you and run the numbers and adjust it when you need it and all that. Just want to give you this as an example. So we'll start paying ourselves back $500 a month, $6,000 a year. Okay, we'll do it for 5 years, just like a typical car note does. Right. So what happened during this first 7 years? Well, we put $10,000 a year into the policy, a total of $70,000. We took $25,000 out of the policy to buy the car. We repaid ourselves $30,000 to pay ourselves back, just like we would back any other bank. So at the end of the day, we put $100,000 into this thing. We took $25,000 out, so a total of $75,000. All right. Now you'll notice we put $75,000 in, and if you look at the cash value right there, $67,881. All right. So we put 75 in and we have 67,000 available. All right. So that's 91 cents of every dollar that we put in. We now have available, but what else do we now have? We have a $25,000 car sitting there in our driveway, bought and paid for, free and clear. But does this policy end after 7 years? Because I show you how to get back every dollar for every car you'll ever buy, drive, and own, not 91 cents of it, right? So this policy doesn't end. So let's say we keep on going with this thing. All right. But just for simplicity, let's say we do not put any more deposits into this policy after 7 years. Now, in reality, you're going to want to keep dumping money into this thing as long as you can because you're going to see it gets more and more efficient every single year. But let's just say we don't put any more money into this thing after year 7. Well, look over here at the cash value column. What happens inside this policy over the next 5 years? That keeps growing, right? We're not putting any more money in, but look at the growth within that policy. Why? Because all of this money you've put into this thing since day one, it's in there compounding and growing for us uninterrupted for the rest of our lives, even when we use this money to do things like buy cars. So what does this look like over the next 5 years? We take 25,000 out, we repay ourselves $30,000, so we net injected $5,000. But look what happened. We had $23,000, $592 in growth. All right. We put 5 grand in, but it grew by $23,000 to $91,000. So now I have 2 vehicles worth $25,000 a piece, and I have $91,000 in my account ready to be used again and again and again. Starting to see the power of this? What would have happened to all this interest that we have done this using somebody else's banking system? It would be gone. What if we would have done this using cash? We would have had none of this uninterrupted compounding going on at the same time. See, for this to work though, we got to follow 3 different rules. Number 1, we want to pay ourselves first. Remember back to the dollar bill example, change one thing where our money goes first. We have to start paying ourselves first. So how do we start flowing money into this policy and then using that money from the policy to go out there and pay for these other things in our lives? We'll create the plan for you, don't worry. Number 2, we always want to pay ourselves back with interest. So again, if I borrow money from somebody else's bank, I'm going to pay them back with interest. If I borrow money from my bank, I'm going to pay myself back with interest. Fair enough. How much interest do I pay myself? That's up to you. What I do is I just mimic what I would pay the bank. So if I'm going to go buy a car today, I'm going to call the bank first. Hey, what's the going rate on a car note? They'll tell me. I'll go on a financial calculator. I'll calculate it out and I'll figure out exactly what my monthly payment back to myself is. Rule number 3, never steal the peas. So here's the kicker on all this. If I go buy a BMW and I stop making the monthly payments, what's going to happen? They're going to repossess that thing on me. All right. If I go buy a BMW with my banking policy and I stop making payments back to myself, what's going to happen? Well, it's up to me to decide, but I don't think I'm going to repossess my own vehicle. All right. So I can stop if I need to. If I get in financial trouble and I can't make monthly payments for a while, something of that nature, it's fine. I can pause it. I can wait. I don't have to pay back that loan from the policy. You always want to. It's one of the rules in infinite banking, but you don't have to. And that's the biggest difference is who's in control. You are. You're in control. See, this is all about control. One more time, pay yourself first, pay yourself with interest. Always recycle, recapture your money. Never steal the peas. And if you've read Nelson Nash's book, Becoming Your Own Banker, you'll get that reference. Never steal the peas. Or if you haven't read the book yet, go read it and shoot me a message or an email when you read that section. You'll laugh about it. Okay. Don't steal the peas. By the way, you guys can follow me on Facebook. I'm always posting fun things on there. We share a lot of the lives on there. It's just at Nagy Leadership, Stephen Nagy. You guys will see me on there. All right, cool. And if this works for a car, what else in your life could you use it for? So this is one of the tools. We've created a bunch of different tools to really help people with all this. So again, on that call, we'll talk to you. Hey, one of my goals is to buy a car. Here's how much money I want to put into the policy. We could create this beautiful spreadsheet for you to show you exactly how much you're borrowing, what the interest payment is, how much you're repaying back to yourself, what the growth looks like, all that good stuff. So we'll create this plan for you. Really, really cool stuff. Don't steal the peas out of the freezer and the refrigerator. All right, cool. Let's keep rolling. Examples of using the machine. The marathon, paying off debt faster while still building wealth. All right, so this is a chiropractor. Anybody have debt on here by chance? Any of you guys have debt? Does the interest payments go back into cash value? Bert, that's a great question. So you can put the interest you're paying monthly back into your cash value? Absolutely. There will come a point though where your interest payments you're paying yourself back exceed the amount that will go into that policy. And that's why we use what's called a segregated bank account or a separate bank account. So any extra money that is in there that you can't fit into the policy, it builds in that segregated account. And then from there, that's what we can use to start opening additional policies. And I'll talk to that in just a second, but great question. Great question. All right. So this is an example of paying off debt. And this is a chiropractor. This was about 10 years ago, 12 years ago, but still a great example. So this guy had $478,000 in debt, including some houses and condos and things like that, but pretty good amount of debt. You know, something I've learned about people that make good money, they end up spending good money and end up getting in some debt. It seems to happen with the best of us, but very common. The more we make, the more we spend, the more debt we incur over time. So total debt, $478,000, total payment, $5,700 a month. He was paying almost $70,000 a year in debt. We ran the math for him. If he was to keep up on that pace and at that schedule that he was currently doing, it would take him 19 years to pay off that $478,000 in debt, assuming he did not incur any more. So what we did is we said, okay, what if we could show you a better way and prove it out mathematically? And that's exactly what we did. So let me show you what it looks like. So in year one, he decided to start a $25,000 a year policy. So he deposits $25,000 in. He immediately has $14,863 available in cash value. Again, the cash value is the amount that you're able to take a loan from. So he could take a loan of $14,863 the first year as soon as he deposits that $25,000. When I say as soon as, it takes usually 3 to 4 weeks, within 30 days, to be able to take that first loan right back out. And again, if you're an investor, you want higher cash value, just tell our team we can build this thing with higher cash value available immediately. But this is a great example, nonetheless, of this policy. All right, so we take the $14,863 out. We immediately use that money to pay off the Discover card and pay off the Lowe's card and pay down the Nordstrom card. All right. As soon as we paid those off, we eliminated those monthly payments. Okay. So you'll see the total monthly payment went from $5,900 to $5,300 a month. And the total debt went down to $463. Year two, what happens? Well, he's able to put another $25,000 into the policy in year two. The cash value that year available is $16,571. And you'll notice the amount of cash value growth every year that you own this policy for the rest of your life will be more and more and more and more and more guaranteed. Okay? These policies are guaranteed to grow annually. All right, so $16,000 in cash value, payments of $53.74, and he has $21,945 of cash now. What is that? Let me see who's following so far. That total cash, that $21,945. Where did that come from? Where did that $21,945 come from? Yeah, it's the monthly payments. Okay, so this $448 a month that he was giving to Discover and Lowe's, well, guess what? Just because we're not paying those banks anymore, who are we still going to pay? Ourselves. So while 5329 is going to these other banks still, that 448 is going to go into our banking system. So over 12 months, 448 over those 12 months is 21,945. So that's sat in there built in that segregated account, or maybe in the policy, okay, depending if you can fit it back in. But now we have the cash value from the additional $25,000 deposit, as well as the $21,945 that we can use. So we take that 16,000, that 22,000, we pay off the Nordstrom, we pay off the Wells Fargo, we pay off the private loan, and we pay down the BMW payment. So that just dropped our monthly payments to other people's banks to $3,860, with $1,917 a month going to our banking system. So year 3, 25 goes in, we have 25,000 we can pull back out. We have an additional 48,000 in recaptured cash. So we're able to take all that money, pay off the BMW, the West Marine credit card, pay down the condo. $2,100 going to other people's banks. All right. So let's just do a quick recap so far. So over the first 3 years, we put $75,000 total into this policy. We took out loans of $14,000, $16,000, and $25,000 each year for a total of $55,000. So how much is left in the policy? If we put 75 in and we pulled 55 out, how much is left in the policy? 20,000? Nope. $75,000, all of it. Why? Because when we put money into this policy and we're taking money out to pay off debt, to buy cars, whatever the case is, that money doesn't actually come out of our policy. What we're doing is just like the bank at the beginning of this. We're using our policy as collateral, and we're actually borrowing this money from the insurance company. That allows all of our money to remain in the policy, compounding and growing uninterrupted, tax-free, guaranteed for the rest of our lives, while we simultaneously are taking loans from the policy to use it for other things. And that's really the power of all of this. And that's where you're going to start seeing this compounding really becoming more and more powerful as we go with all this. Watch and see, guys. It's really, really cool stuff. So 4th year, 25,000 goes in, same thing. We continue to pay off debt, put money into the policy, pay things down. Okay, look at that. Year 6, we're getting there. Year 6, we put $10,000 into that policy. We start another policy, put another $25,000 into the new policy. And you guys will see that eventually you won't be able to put as much into your first policy, or maybe you're doing better financially. You paid off some debt, you got some more disposable income, whatever the case is. Well, we max these policies out where you can only put so much in them. So at some point, you're going to want to grow your banking system. Well, you can't put more into your existing policies. So what do you do from there? You open up additional policies. I think Brent Kessler has like 27 policies now. I got half a dozen policies now. Chris has like 14 or 15, something like that. Now, you just keep adding policies as you grow financially and grow your banking system. That's exactly what this chiropractor did in year 6. He's putting $10,000 a year into his first policy and $25,000 a year into the second policy. But look at the cash value available. Remember, when you start a new policy, you're in year 1, so the cash value available to you is less than what you put in. But look at year 6 of his existing policy. Puts 10 in, can borrow back out 13,000. That's a 30% cash on cash return that year. He puts 10,000 in, can immediately pull back out 13,000. 30% more than what he put in that year. All right, so we take that money, we pay off that last house in year 6. Now what do we do? Now what do we do? Now what do we do? If we just paid off that debt, okay? We're not paying any of that money to anybody else's banks anymore. What are we going to continue doing, though? We're going to continue paying it back to our banking system. We're going to fill that policy back up. We're going to pay off those loans. We're going to get that cash value increased again. And then what are we going to do? We're going to start using that money for other stuff. And that's where I'm going to get into this in just a moment. And again, we'll build all this out for you. We get these questions all the time. This is an example. So we'll build these out using our BYOB vault tools. And that's why I've said before, bring your debts to the table with you. Let us know what you got going on. Let us build this out and show you exactly what it can look like for your situation. Which way should you go? Should you stay the course? And we'll tell you, listen, if what you're doing now is better than what we can show you how to do, keep doing what you're doing. That's great. I've never seen it yet, but could happen. Do you snowball this thing, lowest to highest balances? Do you snowball it using highest to lowest balances? Do you avalanche it? Do you do one of the above and IBC? Like, what is the best strategy? And we're going to run this for you and run these calculations and show you with math, with statistics, exactly what it looks like. So this is what we call a debt blaster. So we'll give you guys this beautiful little debt blaster plan so you can follow and do exactly like the chiropractor did. I like to think of it as a financial GP. It's kind of silly because nobody has these in their cars anymore. They're all on our phones or built into the car, but it's a great example. You could hop in the car today and I could eventually make it up to Buffalo, New York to visit Chris just by driving north eventually, or I could follow my GPS and get there a lot faster and more efficiently. So that's what we want to do. We want to create that plan for you. Use our BYOB Vault tools to create the plan so you can get there quicker, faster, and painlessly. And this is everyone's favorite part, the millionaire. What if I have no bad debt? What if I don't need a new car? Can I still benefit from privatized banking? Should I still become my own banker? The answer is, oh yeah, because this is where the fun begins. This is where we can really start getting into some cool things. Here's some different things that we like to use to move money. Real estate, commercial properties, private funds, private passive lending, businesses, stocks and options trading. Great market right now with the volatility for that, if you know what you're doing. Startups, notes, IP, crypto, equipment flipping. What are you investing in? What can we do with this? And here's the beautiful thing is I'm not talking about today is start a banking system, start a policy, or go invest in real estate. What am I saying to all of you today? I'm saying start this banking system, buy this policy, put money deposits into this policy, and go do all this stuff over here. This is not an either or situation. This is an and asset. Caleb Gilliams, check out Caleb. Caleb Gilliams wrote a book called The And Asset. All about this right here. Very, very cool stuff. And that's what we're going to do. 2 laws for creating and growing wealth. Number 1, compounding interest. Albert Einstein actually coined this phrase. He called it the 8th wonder of the world. Those who understand it use it. Those who don't pay it. Number 2, money in motion, money movement, money flow, money sittings losing, money in motion is making more money. And why this is the most powerful financial strategy I've ever seen in the last 15 years being in this world, of being in this space, is because we can do both of these right here, laws for creating wealth. We can do them simultaneously with these specially designed whole life insurance policies. So why do we use a whole life insurance policy again? Because there's no other vehicle in this world that I've found yet that we can put money into that grows guaranteed, tax-free, compounding until I die, and I can simultaneously use the money for other stuff. There's nothing else out there like it. That's the only reason we do this with a whole life insurance policy. And the cherry on top is what? The cherry on top is that death benefit, that legacy, leaving large amounts of money, in most cases, to our loved ones down the road. It's a beautiful, beautiful thing. So let me show you how to use this as a wealth building tool, specifically in real estate, just because that's what I do. So this was a policy for a real estate investor. This was a young lady, one of my clients. She was out west, but she was a real estate investor. And she said, Steven, I got 150 grand sitting right now in someone else's bank account. This was a few years ago when rates were still very low. She goes, it's just sitting there, but I want to use it for another project. I want to use it for another one of my deals coming up soon, but can I get it in the policy first? She said, but I can't really commit to 150,000 every year. She goes, I want to put about $50,000 a year in, maybe a little bit less, but I like to put up to $50,000 a year in starting in the second year. No problem. So we built her this policy right here. You can see in year 1, $150,000 goes in, contract premium. And then each year after that, $50,000 goes in. Now you can see over time, the amount goes less. And that's because of MEC rules and regulations and how we design these policies. But she's able to put this money into this thing. All right. And if she has a tough financial year, she can put in as little as $18,000. She doesn't have to put the $50,000 in, but that's the max she can put into it. Okay. But you can look over here, look at that net cash value column over there. She puts 150,000 in the first year. How much cash value does she have available to pull out, to use? $132,000. So she puts 150 in that first year. She pulls 132,000 out to go into another real estate deal. But look what happens over time with this thing. Let's say, and this is the ultimate goal. And actually, Chris said this to me the other day. He goes, somebody told me, he goes, you guys, what you guys are doing with Private Money Club is you're teaching people how to become active investors and turning them into passive investors. And that seems to be the path that so many people take. Active real estate can generate so much wealth. There's so many advantages to it, but it's a lot of work. And so a lot of people eventually build up that wealth. And then what do? They become the ultimate bank by running their money through a policy and then start to lend that money out, just like banks do with mortgages and notes. We're going to start doing the exact same thing. So this is the example I created for this young real estate investor, 41-year-old real estate investor. She said, listen, I'm going to flip houses. Probably I'm going to do real estate deals for the next 5, 6, 7 years. And then I want to become a passive lender. So we said, here's the plan. So look at this thing. In the 8th year of this policy, the bank grew by $66,000. So you can see that cash value increase. It grew by $66,000 in year 8. How much did she put into the bank that year to have that growth? 48,000. So you can see the contract premium over there is 48,594. So she put 48,000 in, she could pull 66,000 out. That right there in itself is a 37% cash on cash return. Does that make sense to everybody? If you put 48,000 in and you could pull out $66,000 a couple days later, not bad, right? So that's a 37% cash on cash return that year when she put her money in. And then what is she going to do with this net cash value over here? She's going to do a private lending deal. Her money's backed by a piece of real estate. It's collateralized by real estate in a first lien position with a mortgage and a promissory note and all the legal documentation and done the right way. So she's going to lend her money out. Let's say she lends it at 12%. Would anybody pay me 12% today if I gave you $300,000 to go do a real estate deal? Guarantee you almost everybody on here that's a real estate investor would do that. So that's what she would do. She would make $12,000 on the private money loan that year. She made 37% within her private banking system just by the compounding growth. Now, when you borrow money from a policy, you do pay interest to the insurance company. So I want to make that very, very, very clear. Anywhere from typically 5 to 6, a little bit more right now, depending on the carrier. Let's use 5% for this example. All right. So are you guys okay with that though? I should ask. If I'm earning 44%, are you okay to pay the insurance company 5% to use that money? Okay. All right. So what did we do differently here? We did nothing different except 8 years prior, change where our money went first. Because if I would have never done this, used somebody else's banking system for the, or, Chase Bank for the last 8 years, I would not have this growth that I now have. So I could still go do the private money loan and earn 12%. That's it. But because 8 years prior, I started my own banking system, or she did in this case, now she's able to earn 44% on the same transaction instead of 12% that she would have otherwise. And that's what being your own banker is really all about. It's making that one change where our money goes first. Okay. Now there's some discipline involved. You got to make sure you do it the right way. You work with the right people. Hopefully that's us. We are, again, the BYOB money multiplier. This is all we do all day, every day. Let me give you one more example. Here's another policy. This was a young kid, 37 years old. Year 1, he dumped in $50,000, and then he wanted to put a little under $500 a month into the policy. So he puts 59,000 in the first year, has available 51,554. But look at the growth of this thing over time. I mean, in the 5th year of this thing, you have a 26% cash on cash return that year. The 10th year, a 54% cash on cash return. Look at this. When he's 50, let's say 62. Most people at retirement age, 62 years old, he puts $5,500 into the policy. It grows by $20,000. That's a 281% cash on cash return. What did he do? Nothing different. He just put the money in. Your money's got to go somewhere, under a mattress, buried in the backyard, Chase, Bank of America, or your own banking system. You make the decision where you want it to go and what that advantage is going to look like over time. So if you're an investor, if you're somebody doing real estate, doing private lending, businesses, anything like that, we can run what's called a gain projector for you. And the gain projector is going to show you, here's what your investments look like without this system, without this policy. Here's what your money looks like with this policy. And you'll see over time the growth and especially the explosive hockey stick once you hit a certain year, which is what we like to call the efficiency point. But you'll see that really start to crank up over time, which is cool to see. All right, so we'll build all this stuff. These are all part of the BYOB Vault tools. Just ask your money mentor about them, okay? Here's a quick example of how money flows using this policy. So you'll see the money multiplier policy. This is where our money goes. We borrow the money out. Again, when you take a loan, you're paying about 5-6% to the insurance company. It goes into that segregated bank account that I mentioned. From there, we take the money out of the segregated bank account. We lend it out on a private money deal, let's say at 12%. Those monthly payments start coming back to us from that private money loan. We're going to keep the spread, okay? So we're going to keep the spread, and then we're going to start recapturing that money back into the whole life policy. And then this circle just goes on and on and on and on and on. Okay, and we can get more advanced. We can talk about leveraging policy using first lien HELOCs. We can talk about all this different stuff, but at the essence of it, this is a simple, just easy way to visualize this. Does this make sense to you guys? All right, if you want to learn more about Private Money Club, real easy, just go over to privatemoneyclub.com, and it's a free membership. You can join. We do have some coaching involved. If you want to learn more, you can buy certifications. You become a premier member, all this different stuff. But privatemoneyclub.com, if you want to check that out, very, very powerful stuff. Again, if you want me to send you all this stuff, guys, just send me an email. Put it in the chat box one more time. I only got a couple more slides here, and then I'll answer all your questions. So please get your questions over in the chat box. All right. Put the link for scheduling a call again over there. You guys liking this? Is this good stuff? I haven't done this presentation in a long time. This is fun for me. So let me make sure I didn't miss anything. I always have this slide at the end to make sure. All right, loans never have to be repaid. You set the terms. I think I hit that. Yep, internal policy growth is tax-free. The death benefit is tax-free and creates a legacy for your loved ones. Policies are exempt from judgments and liens in most states, very private, very protected. We can use these things for COLI, for company-owned life insurance. By the way, if you own a company and you're looking at various ways to do key man policies, we do company policy stuff all the time, deferred benefit plans. We can do some really cool stuff with company-owned policies. It's known as COLI, COLI, company-owned life insurance. It's very similar to BOLI, the bank-owned life insurance, and what we do with individuals is just owned by the company. So there's some different advantages there. If you have an LLC, it might be smarter just to have a personal policy, borrow, lend the money to your LLC, use it within the company, pay yourself back that way. But again, your mentor can get a little bit more in depth with you on all that stuff. Kids policies, some of the best ones I've ever seen. Why? Because these things operate off of time, and time, compounding takes time. So the sooner we could start these for our kids in our lives, the more beneficial it'll be over time for them, which is really, really cool. And of course, you decide how much to fund and put into the premium deposits into this thing. All right, guys, so that's me. I'm Stephen Nagy. This is the BYOB Money Multiplier Infinite Banking 90-minute training. So I hope this gives you the foundation and the basics of what this system looks like. Again, we do teach 6 live trainings every single week, and we put out new content on the YouTube channel at the Chris Naugle at the Chris Naugle on YouTube. Every single day almost we put out new content. So we will never leave you wondering, looking for help, never leave you in fear. We're right here to help you, provide education, support, and take care of whatever you need. I appreciate all of your time today. I appreciate all of you being here with me. And I look forward to seeing all of you come through our pipeline and start your own banking policies with our team. So with that said, please put any questions you have. I'll answer those questions now, and make sure you get your calls scheduled so we can take care of you all. So thanks for being here, guys. This is recorded, yes. And if you want the recording, I forget where we put it. I think we put it on the YouTube channel. But again, if anybody wants to email me, I can send it over to you too. It usually takes like a day or two for the video editor people to get it online. All right. And those of you I have not met in person at an event, I would also welcome all of you to join us at a live event. Just keep your eye on emails, but we do an annual Money Multiplier event. We do a couple Private Money Club Money Tank events a year. I'm usually traveling to other people's events occasionally. So keep an eye on your emails, and we'd love to meet you in person. That's where real relationships are made. Zoom is great. I love being in person with people though. Kathleen, yeah, shoot me an email and I'll definitely send it over to you. Over in the Q&A, Monica just wanted to know when Jason and Brent will give me a call. I know Jason and Brent are both in Whistler. Colorado or Whistler, Canada right now. So it might be next week, Monica, but just shoot them another email or maybe just text Jason and he'll get with you for sure. What if we lose the dollar? Which dollar? What is the interest rate on the loans from the insurance company? They range typically between 5 and 6%. They'll vary occasionally. Lowest I've seen in the last 5 years was around 4.5%, which was before rates went up. Now they all seem to be about 5.5%. Lafayette jumped up to 7% for a little while, but they're coming back down right now. So they're all trying to figure out this interest rate environment that we're in, what the Fed's going to do, things like that. But when you look at, you know, I don't want you guys to focus on the wrong things. While it's important to understand the interest rate and what we're doing with it, when we actually calculate out your situation, that part's more important, okay? So let us know what you're using the policy for, and we can plug it into our software and show you, hey, if the interest rate's 5% versus 6.5% or whatever the case is versus not doing this at all, the interest rate is not going to make that much of a difference in the grand scheme of all of this. Having the money run through the policy, though, makes a huge difference regardless of what that rate is. But right now it's about 5 to 6%. So good question. I just don't want to focus on the wrong things. Kusa said, can you send me all the links that I need? If you email me, I will do that, Kusa. Yeah, you guys email me. All right. Frank, you got to send me one, man. I'm not copying down any emails right now. But if you guys need anything, just shoot me an email and I'll send over whatever you guys need. Again, if you would like to schedule a call, I'll put that link one more time in here. I don't see any other questions over in the Q&A box. With that said, tomorrow morning, I'll be hosting What the F Happened. You can find that on the YouTube channel, watch it live or on Facebook. Again, I'd love for you guys to join me on Facebook. Send me a friend request. That's always a fun way to stay in touch with people if we're not already friends on there. In fact, let me just share the link over there so you guys can do that real quickly. But we stream What the F Happened and our Ask Me Anything we do every single Wednesday on the Facebook pages as well. So you can live stream on there or on YouTube. All right, there's my Facebook right there. All right, well, again, I appreciate everybody. We'll talk to you all soon, and I look forward to working with all of you as clients if you're not already. Thanks so much for being here. Have a great day. Bye.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.